Hey, welcome and thank you for joining us today. My name is Alexa Milne with CFIB, and we're very happy as always to be here presenting our weekly COVID webinar for you. Before we begin, I'll just make a few technical notes. On the webinar panel, this is the blue or orange flower icon on your screen. You'll see a handouts pane. Here you'll find today's presentation where you can open Save for later. There's also a questions pane where you can type your questions for our panelists today, and we'll do our best to answer as many live as we go. Following today's presentation, you will receive a recording of the webinar, so you don't need to worry about frantically taking notes as we go through. With that, I will now introduce Laura Jones, our Executive Vice President and Chief Strategic Officer. Thank you, Laura.
Thank you, Alexa. I think my camera's just coming up. Here we go. Thank you. Hi, everyone. My name is Laura Jones. I'm the Executive Vice President at CFIB, and I am joined today by my capable colleagues, Corinne Pullman, Brendan Rolfe, and Rachel is also with us today. And together, we're going to do our best to answer your COVID-related questions on our 41st weekly COVID webinar. And I know many of you have been joining us regularly. So for those of you who have been with us, welcome back. For those of you who are just joining us, these are our weekly webinars where we work to answer your questions and keep you up to date on what's new with the programs. As we said in the email that we sent out with respect to this webinar, we actually had a little debate internally. Do we do a webinar this week? Because there wasn't as many new announcements to go through with you as there have been in some weeks. And for the past couple of weeks, and you know, last week we had CRA as a guest, we had an accountant as a guest the week before to focus on taxes. So we had a little debate, but we decided that what we would do is run through the most frequently asked questions that we're getting through the helpline. So that's our primary focus today, but we are sensitive to some of the feedback we've gotten from the webinars, which is, hey, if there's not a lot new, maybe you should, skip a week. So just to be upfront with everybody, there's a few new things to update you on, but what we're doing today is focusing on those frequently asked questions. So with that, let's get straight to our commitment to you, which I repeat every week. So our commitment is that we'll keep things as up to date as possible on our website. And of course, you can always call us if you have questions. Our helpline volumes sometimes do spike, particularly when there's program announcements. I know over the past week, because of the reopenings in Ontario, the reopening announcement and some of the program issues in Ontario, we've had heavy call volumes on that. But we're very committed to getting back to you and getting back to you in as timely a manner as we can. So if you do end up having to leave us a voicemail because we're in one of those spikes, rest assured we will get back to you. Okay, and on the next slide, I always like to start with a few quotes, and it feels like we're at that place where we can kind of see some light at the end of the tunnel. Finally, things are getting better in most parts of the country. So we found a few quotes that reflects that the best way out is always through is one of those. Seems impossible until it's done, Nelson Mandela. Every strike brings me closer to the next home run. And then given that we had CRA on last week, and we did have some of you express some frustration at, they were helpful, I think, in some ways, but some of the answers were less than satisfactory. And I think for those of you who were with us last week, you see some of the challenge that we're up against when we're talking to them, and sometimes they don't have the answer to your question, and we're having to push for that. So I thought it was kind of funny, the Snoopy quote, I'm writing to cancel my subscription. Please remove my name from your mailing list. I think some of us all have those moments where we wish we could do that. Of course we can't, but we wish we could. Okay, on to the key topics that we're covering today. As I just mentioned, we're going to focus on those frequently asked questions through the helpline, and there's a whole variety of them. For you Ontario members, because we've got members from all across Canada on this call, what we decided to do is put the content on the questions that you are asking currently on the helpline with respect to reopening and also some of the program issues that you have. That is in the first part of our appendix for this deck, which is right on the side of the slide deck. You can get there. We're happy to take some questions on that, and we'll probably refer to some of those questions through the deck. But for those of you from Ontario who might specifically be looking for that content, that's where it is. And so we're going to, but before we get to those frequently asked questions, there are a couple of things that are new that we'll give you a quick update on, and then of course we'll get to as many of your questions as possible. The first thing that's new is CFIB's Small Business Recovery Dashboard. We survey you regularly, as you know, and we get this out publicly to make the case that we need continued pandemic support, and also to make the case to consumers to continue to think about small business every day in their shopping, and maybe choose small business over Amazon when they're looking at that choice. And for retail, and obviously for restaurants to do takeout, delivery, whatever they can do, depending on what's possible there. And we've moved backwards on the dashboard. So we were at close to 2/3 fully open. That's moved backwards to just over half, about 40% fully staffed and 25% at normal sales. But I included on this slide, just for everyone's interest, you can see how different it is across Canada. So Ontario has been one of the most shut down provinces, and you can see that only 20% of our members in Ontario are at normal sales as a result of that, compared to, say, a province like British Columbia that's been much more open, and where you've got 1/3. I mean, 1/3 is still not great. We want to see that number way higher than that, but it's 1/3 back to normal sales. 1 in 3 is a lot better than 1 in 5 in Ontario. So you can see that how the lockdowns have really affected the provinces differently. And of course, we're making that case, and our Ontario colleagues are using this as they advocate for our Ontario members. On the next slide. So there we go. So Corinne is going to come and give us a little quick update on a couple of the things that are new. Again, this is not, Corinne, as nearly as lengthy a list as we've had on some weeks where we've got big announcements, but still a few things worth noting. So I'll turn it over to you to make some notes of that, and then to take us into some of the questions that have come through our helpline.
Yes. Hello, everybody. Glad to see the folks that have been able to join us again today. So a few small but still important for those that it may impact things that happened in the past week or two. The first is that the Prime Minister announced earlier this week that for people who had received the Canada Emergency Response Benefit, that was the income support measure that existed up until about September of last year, who applied, so this is for the self-employed in particular, who applied using gross income instead of net income, will not have to repay the CERS. So just a bit of a synopsis on that is that in order to access the Canada Emergency Response Benefit as someone who is self-employed, you had to show that you had at least $5,000 in income in the previous 12 months before the application or in 2019. And because there was a lot of mix-up at the beginning of the program, that it wasn't clear whether the $5,000 would be based on gross income or net income, ultimately they decided it was on net income. But a lot of people had applied based on their gross income, and then later, once the audits happened just in the last few months, were told that they had to pay all the money back. However, because there was a real lack of clarity for the first couple of months, we had certainly been pushing government to sort of rethink that, because it's really unfair when the clarity is not there from the beginning and people apply thinking that they were doing the right thing, and now we're being told, well, after the fact, that, oh, well, we actually meant net income. So the government, to their credit, has reversed that and is no longer going to require anybody to pay back the money who based it on their gross income and may not have met that $5,000 threshold. So that's really great news. And we know about 1/3 of our members did use the Canada Emergency Response Benefit at the time. So hopefully this affected you. This will be good news for you to know that you don't have to worry about paying it back. Second thing is that the CERS, so the Canada Emergency Rent Subsidy, that there were a lot of questions over the last little while about wanting to make amendments to your application, so that wasn't really possible. That is now possible. So they have finally launched the ability for you to make amendments to your rent subsidy applications. You just have to go back into the portal for where you originally applied, and there now should be an ability to actually amend the application that you made in the past. You have to do that though within 180 days after the end of your application period. So obviously if you applied, say, back in December, you have until 180 days after the end of that period in order to make any amendments that you need to make. The one caveat being though, if your amendment is basically to say that you actually owe CRA money, then you can actually make that amendment post 180 days. So that's, of course, they want you to be able to give them back the money that you owe them. But if you are expecting to get more money from CRA, you have to make that amendment prior to the 180 days being used up. The other piece of news, of course, is we're seeing now slowly, but caseloads and hospitalizations across Canada starting to come down. Obviously, it's very different from region to region across the country. And as a result of that, we are seeing many provinces starting to reopen to some degree. Having said that, many of those restrictions are still in place of various types. So this week we had announcements from Quebec, last week already, Ontario this week, Manitoba this week as well, all putting plans out there of how they're going to start to reopen at least parts of their economy. So that is good news, but it does mean some more businesses might be able to actually broaden the amount of ability to get in front of their customers. But of course, there are still quite a few restrictions in terms of the number of people, the capacity that they're allowed in their businesses, as well as new rules that are coming along with that. And as Laura mentioned, in Ontario in particular, we're getting lots and lots of questions. In the appendix of this, just as a reminder, is a bit of an overview of what those rules are going to look like, as well as lots of questions about the grant that's associated with it in Ontario. The one exception to all of this is Newfoundland and Labrador. They actually had to go more strict this week. They had been fortunate to have not had that many cases up until this week, where they've now seen a bit of an influx. So they have shut down parts of the Newfoundland economy just in advance of their election, which is on Saturday. So they are going to continue with the election, but unfortunately parts of Newfoundland are being shuttered right now. So that's the news. So what we wanted to do now, as Laura mentioned, is sort of give you a bit of a flavor of the top types of questions we're getting on our helpline. Hopefully that'll help some of the questions that maybe you have today. And if not, of course, we'll get to those questions as well, but we figured that these might be a good place to start. And so hopefully maybe within these, you'll maybe learn a few things as well, or trigger some other questions that you may have. So we're going to jump right into it. So we can go to the next slide. You'll see here, this is sort of the questions we're getting on the program basic side. So first of all, lots and lots of questions about, well, what happens after March when it comes to the wage subsidy and the rent subsidy? Because, you know, we have sort of the formula in place for up till the March period, or period 13, which ends around mid-March. Also, we know that both of these programs are supposed to be in place until June, but what happens from March to June? Well, we don't know yet. The government has not yet announced what that period is going to look like. So we are waiting. We're pushing them to try to get the information out as soon as possible, because we know businesses want to start planning, because mid-March is about a month away right now. And we'd like to see what that period is going to look like. I suspect, as I talked about in previous webinars, that the government is kind of waiting to see how the economy kind of goes, to understand whether they need to keep it as it is, to make it more generous, make it less generous. In other words, what that is going to look like. And I'm going to get back to, well, the third question on here, which is a lot of questions that we're getting, is how are they going to compare revenues come March? Because as you know, revenue drop comparisons are based on the current month. So for March of 2021, is it really going to be fair to compare it to March of 2020 as we've been doing for January and February? Considering that March 2020 is when the revenue started to drop and businesses started to be forced to close. So I just wanted to make you aware that obviously we've been raising this, we're getting a lot of questions around this. What we've basically been told when we talk to government is they know that it's going to be problematic to compare March 2021 to March 2020. So I think they're looking for a different solution, could be as simple as, and this is what we suggested, let's just go back to March 2019 and continue to use that as the comparator from March going forward. Again, don't know exactly which way they're going to go, but that is certainly, I think, something that they're looking at right now, and they are aware that it would be problematic to compare it to March 2020. So hopefully they'll come up with a good solution that will be okay for everybody to be able to properly compare the revenue drops from one period to another. I will go back to the second question here, though, because there are some questions around, will these programs get extended beyond June? What happens? We don't know at this point. There is a budget coming up. So the federal government does their annual budget usually around March, April period. As part of that, we provided a large list of recommendations. Included in that this year is that they should be prolonging these programs as long as businesses are suffering under restrictions imposed by public health authorities. We've suggested it should be at least till the end of the year. Again, I suspect that may be something we'll see in a budget when it comes out. We did not have one last year because, of course, the pandemic had just hit around the March-April period, but we are pretty confident there will be a budget this year. And hopefully among that will be what happens post-June when it comes to these programs. And we're certainly recommending that these programs remain in place, especially for businesses that are really hard hit. And that they're able to have something to help support them as they come out of this particular challenging time. To go to the next slide. So let's jump into one of the programs that's been popular lately, and it's probably the most popular program of all of them because over 800,000 businesses have accessed the Canada Emergency Business Account Loan. And right now, of course, there's a $20,000 expansion that's associated with the loan. So for anybody who got the $40,000 sometime in the last year are now going to be able to access the $20,000 expansion loan. However, there is a proportion of business owners who've been told they are not successful. And what does this mean? And we get a lot of questions around how to proceed if they got the not successful response. And essentially, there's a lot of different reasons why you may have been deemed not successful. And there is a possibility you may be able to resubmit corrected information or new information that will help your bank and EDC determine whether or not you are actually able to get the CEBA expansion loan. However, to do that, they're building these new systems or processes right now technologically in order to be able to accept those new applications and determine whether or not you're going to be able to still be eligible or not. And those systems aren't going to be ready till, well, we just heard this morning, late February. So that's the unfortunate side of all of this. But once those systems are in place, your financial institution should be reaching out to you to say, okay, there has been this error found, you need to correct it, and you need to then resubmit these forms or reapply for the actual loan. There are going to be some instances where businesses who had applied under the payroll stream, and this has only affected people who are under the payroll stream, those between 20,000 and 1.5 million, that will be told that they're actually not eligible, and therefore they're going to try to put them through the other streams and try to get them to be eligible. So there is a bit of a process to still come for those folks. So a not successful result from your bank doesn't necessarily mean you're not going to get it right away. It may mean you'll get it in the future, but there's still a small possibility you may not get it at all. So our suggestion here is if you don't hear from your financial institution by the end of the month, end of February, go to the CEBA website, check your status of your application, and give them a call to find out what's going on. Rachel, anything color you wanted to add to that? Yeah,
I just wanted to add that we've been hearing on the CEBA call lines that, or the CEBA inbox, sorry, that a lot of you are really trying to get us to expedite this. And in these certain scenarios, there's no real speeding this up. We're kind of stuck waiting with you, depending on your scenario, for the end of February. So, I mean, feel free to share them with us, and we're happy to guide you through what your particular scenario might look like. But sometimes the answer for this is that we just have to wait for the EDC.
Yeah, and unfortunately, the EDC, this is not their particular area of expertise, so everything has been taking a little bit longer than it should. And so we tried to be patient, but we certainly continue to pester them to get this done as quickly as possible. The other sort of CEBA related question we often get around is non-deferrable expenses. So this is the other stream. So this is those that can't get in through the payroll stream, the 20,000 to 1.5 million. They have an option to try through the non-deferrable expense stream, where you have to show that you have non-deferrable expenses of at least $40,000 per year. And so there, it's a little bit more paperwork. You have to actually submit paperwork showing what those non-deferrable expenses are that can add up to 40,000 in a year. And what we're getting is a lot of folks getting those particular documents or the actual expense rejected as a non-deferrable expense. And this has been frustrating. We know it's been frustrating. It's frustrating for us too. The list that was actually put together by finance and the people that put the program together, we know it's quite limited in terms of not understanding the scope of all the different kinds of businesses out there and all the different types of expenses that they may incur in the course of a year that they can't defer right now. So it's been a really frustrating experience for many people going through that particular stream. We have raised it consistently and constantly with government to say you need to broaden this list and you need to be more flexible about what's included, and you need to be more flexible with the documents you're going to allow to help prove what these non-deferrable expenses are. So that's something we continue to work on and really are pushing government. It is part of our pre-budget recommendations as well, to make some improvements to this particular piece of the CEBA loans. But it is a challenge right now, and I want to tell you that we are very aware of it and share in that. I mean, Rachel can give you dozens of stories of the many different types of ways she's trying to get EDC to change some of the non-deferrable expenses that businesses are trying to use in that stream. So that's what's going on with CEBA at the moment. We'll go to the next slide. All right, so let's talk about some of the more common tax-related questions. We did have, of course, many guests in the last few weeks to talk more specifically about taxes. Hopefully that helps some of you who were able to attend those particular sessions. But these are some of the common questions we're still getting on the phone lines. First of all, will government be deferring any of those taxes? No taxes have been deferred at this point, okay? So at this point in time, the personal income taxes are still due April 30th. Your corporate income taxes or your T2s are still due at the time of at your fiscal, after your, I think it's 6 months after your fiscal year end. GST, HST is still, you still have to submit it on the timeline that your particular business is on. So we will really encourage you to continue to focus on that. We are actively pushing government to look at some tax deferrals. And if not tax deferrals, maybe some leniency around tax deadlines for businesses that may be in a particular difficult situation right now and not go straight to penalties and interest for those businesses. So we're working on that as we speak. They're watching it. CRA has sort of told us that they're looking at it, but they haven't made any decisions. We were told in the past that when they did this last year, only about 25% of businesses actually took advantage of it. My response to that, well, that's 25% of businesses who clearly needed it. So I think it's still something you need to think about for this year for those that need it. We still encourage everybody to get their taxes in as soon as they can if they're able to, but we also have to recognize that for some it may be a challenge. The next one here is about how are all the subsidies received through COVID relief programs treated for tax purposes. And this particular question, I think, has been somewhat challenging over the last few weeks. I think we've unfortunately given some guests have given us some different information than we originally had. CRA wasn't really able to answer these questions very clearly. I want to assure you these are the correct answers to these questions. We have had pretty much all of this validated by CRA. So I want to say that very clearly, all the subsidies that you receive through COVID are taxable, and they must be included as income for tax purposes. But I guess the question a lot of people have is, well, when do you actually have to include it as part of your income? For the CEBA, the Canada Emergency Business Account loan, only the forgivable portion of that loan, of course, is taxable. And it's taxable in the year that you get the loan. So if you got your $40,000 in 2020, the $10,000 of that has to be included as part of your 2020 income. If your expansion, you got the $20,000 expansion. If it was in 2020, you have to add the second $10,000 then to your income in 2020. But if you only got it in 2021, that second 10 grand you can then use in your 2021 income tax. So that's key for CEBA. For the wage subsidy and the rent subsidy, you have to include it immediately before the end of the qualifying period to which it relates. Not when you receive the funds. So for example, here you can see we've used for the 4 weeks ending October 24th, 2020, you have to include it as income on October 24th, 2020, not when you get the subsidy itself. So the subsidy may come in mid-November, but you actually have to include the subsidy amount as income by October 24th, 2020. So of course, depending on what your corporate year end may be, that obviously is something you have to think about in terms of when you include the wage subsidy or the rent subsidy in your taxes. So hopefully that clears things up. We have this here as a handout if you want to take it with you, but that is the way these particular subsidies will be treated when it comes to taxes in 2020 and 2021. Okay, on to the next slide, and I think this is one that I am going to now hand off to my colleagues, so you have a bit of a different person who's talking to you about what's coming up. And so Rachel, this is always a fun one, talking about the PM. I was already just answering some questions on the questions that came in on this subject matter. So I know that there's still some folks a little confused about who fills out the PD27s, for example. So hopefully these will help answer some of those. And Laura, you're here as well.
Yeah, before we go to Rachel, I just, Corinne, there was a question that came up that I suspect is on a lot of people's minds, so I'm going to put it to you. It's Adam's question. Does CFIB think that CERS and CEWS will be extended until the end of 2021? And I know two things. I know you are advocating very hard for this, and this is one of our top asks. You, Dan, me, we're all talking about this. And the other thing I know for sure is that this decision is not in our control, it's in the control of government. Having said that, I think, we do internally have various degrees of optimism about the different things, and I'm going to talk about that in a minute with respect to the CERS piece of it and some of the things we've been raising. Do you want to give people a sense of like, how optimistic are you, that there's a good window for this?
I'd say it's a 50-50, to be honest, at this point. I think it really will depend how the next 2 to 3 months go in terms of the economy overall. If we're able to continue to reopen our economy and businesses are continually able to operate more and more, then they may be less inclined, maybe move it to September 1st. That may be, they also may do this on a step-by-step basis. First move it to September and then maybe move it to December, always watching how the economy is opening up or not. So I would say at this point, I'm more positive it'll probably go into September, less positive about whether it'll go all the way to December, but it really will depend on the economic circumstances we're in. So.
I know the other thing you're advocating for is that there are some sectors that have been particularly hard hit, and that maybe for those sectors that are still very far from normal, that it continue longer than for other sectors.
Absolutely, and I think that there's clearly sectors who've done okay, and clearly sectors who have just had no opportunity at all to, collect any kind of revenue. When you look at event spaces, or you look at gyms, or you look at restaurants in many cities in Canada, it's been a struggle to potentially maintain what they had, much less be able to get ahead of them up the curve. So I do think that there is a bit more that can be done for those businesses, and those are the ones we're going to have to make sure that there is something in place supporting them, as long as some kind of restrictions still exist on businesses in Canada.
Yeah, and there's also the geographical piece that, the urban, like you can be a coffee shop in outside of an urban core doing, reasonably well, but downtown your traffic is down, 80 or 90%. So there's that dimension as well. Okay, Rachel, I'm sorry, I just wanted to get that question in because I suspect that that's something that is on a lot of people's minds. So Rachel, you're gonna efficiently walk us through some additional tax questions, and then we're going to get to general questions in hopefully fairly soon.
No problem. I was just trying to answer some questions on the side there, and I'm not sure if Brendan is also around to help me out with this, but let's talk about the 10% wage subsidy. There you are, Brendan. Okay. So essentially the first question is, how do you report the 10% wage subsidy, and when is the deadline? And how you report it is by using this form called the PD27 form. Actually, you don't have to wait you don't have to wait for this to be filed before your T4s are filed. You can get it done. It doesn't really matter. It doesn't really have a deadline, to be quite honest. But you should keep in mind that if you haven't filed your PD27 form, you may receive a T4 summary that says that there's a discrepancy in your file, but you don't have to wait for that to be completed before your T4s are filed. Hopefully that makes sense. And so I'll ask the second question to Brendan. Who needs to complete the PD27 form?
And before I answer, I'm going to make sure you guys can hear me. So I'm going to channel my inner seance person and say, can you hear me? Thumbs up. Gravy. Okay, perfect. So who needs to file the PD27? If you took advantage of the 10% wage subsidy, so the TWS that we call it, you do have to submit a PD27. That said, if you use the CEWS, CEWS program, but did not use the wage subsidy, the 10% wage subsidy program, you still have to file the PD27 form to indicate that you did not use the TWS. So a little piece of red tape that is obviously an irritant to us because we're anti-red tape, but you still have to file it either way. If you did not use the wage subsidy program or the 10% wage subsidy program, you do not have to file the PD27, thankfully. The basis is if you used either the 10% wage subsidy or the 75% at the beginning with the now current wage subsidy program as it's structured, you do have to file the form, which is a little bit silly, but here we are.
And maybe to give a little bit more color commentary to this, the 10% wage subsidy and the work share program, those are the two things that reduce the CEWS. So this is kind of a way for CRA to double check both the 10% wage subsidy and the CEWS on their end. Yeah.
Yeah, absolutely. So next question for you, because the answer is a little more complex, is how do I report CEWS on T4s? And this is a question we are getting a ton of, and rightfully so, through the business, the helpline, because it is very confusing. And are they based on the amounts paid or the amounts earned? And you're the expert on this one, so I will absolutely defer the question to you.
Thanks, Brendan. Yeah, so the CRA, what they did is they created these new codes that go onto the T4s, and this actually goes into the empty boxes on the middle of the sheet, and they refer to funding or monies paid and not earned when you paid the employee, and those are monies relating to the CERB, the CEWS, or the CESB. And maybe, again, a little bit more commentary on why it was paid was because we had a lot of payroll companies that said, well, we can make this easier for businesses if this is paid. So if we can say that these are paid, then you don't have to do, you as a business don't have to do as much work in all the calculating. All right, so let's move on to the next slide. All right, so is the work from home expense taxable, Brendan?
Thankfully, no. So it's not taxable because it's not considered a benefit, basically. Over the course of COVID, obviously, a lot of employees were forced perhaps out of the office, or where possible, were asked to work from home. Thankfully, government recognized this, and so they said that it is a not taxable benefit, basically. So short answer is no.
Yeah, I think something that also needs to be mentioned is that this is a tax deduction. So you would be reducing your expenses in your taxes, but you don't have to really show any proof of this unless you decide to go into the detailed method. Yeah.
Which leads us to the next question, is what are my employees' options for claiming work from home expenses?
Yeah, and there are three possible options. So one, you can do the basic method, which is, or the simplified method, which is that any employee can claim up to $2 per day. They worked from home to a maximum of $400 for the year on their taxes. And there's no obligation for the employers when the employee actually chooses this option. As far as the employee, they don't actually have to keep any receipts or anything to prove this to the CRA. The second option is a little bit more complicated, but employees may want to claim more than they incurred if it exceeds $400. If they're only claiming amounts as a result of working from home, they can use the simplified form, which is the T777S, to file their claim. They will be required. They will require their employer to provide them as with a completed T2200S, which only has 3 questions for you to fill out, confirming that they were required to work from home. And the reason why I'm putting such an emphasis on the S is because we've been hearing on the phone lines that a lot of people don't see the correct form because they're missing that extra letter. And the difference could be 11 questions versus the simplified 3 questions. I don't know if you want to take that next one, Brendan. That third option.
No, yeah, absolutely. And you mentioned that T2200 form, and if someone's filled that out in the past, you know, it's another brick in the wall of all the paperwork you have to do right now surrounding the COVID programs. But certainly it's not that bad. So basically, if the employee is claiming other employment expenses, so for instance, a motor vehicle, or part of their home as working expenses, you know, some of us have a dedicated home office, they will have to use the long form process, which means that you have to use the long form process as well. So for the employee, that would be the statement of employment expenses, which is the T777 form. And then again, just to reiterate, as the employer, you would be required to fill out the T2200 form, which is a declaration of conditions of employment. So again, it's not a beast of a form, but certainly it's not exactly something you want to be doing in your spare time. But just know that if your employee does make this request of you, or if you expect them to claim expenses over $400 for working at home, just know that you will have to provide the T2200, not the T2200S in this case, and then they'll have to do their part with the T777 as well.
Yeah, awesome. Let's move on to the next slide.
Just when you thought acronyms were getting old, try getting into form numbers. Oh my goodness. Anybody out there fall asleep or what? I almost put myself to sleep using all those numbers. So a question for you, Rachel, is can I still apply to amend my CEWS application for periods 1 through 5?
And this is kind of a heartbreaking question for me because this is one that we get a lot as well. And some people are saying they're just waking up and just realizing they're eligible to the CEWS, or maybe their accountants haven't had time or just coming back from vacation or something. I don't know why. But there's certain scenarios and certain circumstances where you may not have been able to apply for periods 1 to 5 of the CEWS. And unfortunately, what's written in the legislation is that you can't continue to make an application retroactively for periods 1 to 5, and you can't make any amendments to increase any previous amounts. Now, that being said, you should be able you might know that more often than not, CRA never refuses money if you decide that you need to return that. So you can definitely give the CRA Business Inquiries line a call if you're in that boat, or if you're in a special circumstance, to see what they'll say. But from what we've been hearing so far, that February 2nd date has been a hard deadline.
Yeah, good point. Very insightful. But that's it too. Is just like Rachel said, is you know what, you got nothing to lose by calling them and asking, right? So you never know who you get on the end of the line at the CRA, for better or for worse.
All right, next slide, please. All right, so this is actually one of the questions that I already see in my bucket of questions, but is it too late to claim the 10% wage subsidy?
So no, thankfully it's not. You can retroactively access the TWS, but of course you still must be eligible. So you must meet all the criteria that originally was in place, and there wasn't that much in place. And of course you can then reduce your remittance for 2020 by the amount of the actual subsidy itself. So if you didn't take advantage of it yet, you still can, which is good news.
Yeah, so I hope that helps you, Segal. Yeah, what does, I think we might bring Corinne back on because the next question has to do with the highly affected sectors credit availability program. These acronyms are getting quite long.
They are, yes, or as we like to affectionately call it, HASCAP, which makes no sense anyways. So this new program has been launched. It's now out there at your bank. If you are a business that has had revenue losses of at least 50% since I think it was April, Rachel, as the timing of it, you could be eligible for this particular loan. It is a loan guaranteed by BDC 100% at a fixed interest rate. I think it's a 4% interest rate over a 10-year period. It is available through your primary financial institution, and it will be available until June 30th. So there is time still on that one if it's something you want to consider. There is no specific sectors. It really is just based on those who've had higher revenue losses that they can access this special loan. The one key feature, which is kind of nice about it, is there's no personal guarantee associated with it, and they're basing it on your credit prior to the pandemic. So anything that they look at in terms of credit will be only based on anything prior to March 15th of 2020. So they won't look at anything that may have happened during the last year or so. So that is another piece of good news for those that may need a little bit of funding right now. Unfortunately, it is all loan, no forgivable portion associated with it at this point. However, we're working hard for government to potentially look at that, because we know for a lot of businesses, taking on even more debt is not that attractive at the moment. So we are pushing them to potentially add some forgivable portion to that particular loan as well. And we've also been asked quite a bit, I guess, Rachel, on the how do we determine how much they'll receive through HASCAP? Again, that's kind of up to you and the bank. The bank will work with you on what may be the best amounts, but the amounts can be anywhere between $25,000 and $1 million. So that's the little bit of questions we're getting so far on that particular program.
Yeah, I'm also seeing a couple people ask, because it seems like they contacted their financial institutions at the beginning of the program in beginning of February, and it sounds like the banks took a couple of days to get their applications together. Yeah. So that is entirely normal from what we've heard, but they should be able to help you now, I think, right, Corinne?
Yes, I believe definitely all the big banks should be offering it by now. If you're in a smaller bank or at a credit union or a smaller credit union, it may take them a little bit longer. There is also a caveat that if your particular bank or credit union doesn't offer it and is not planning to, you are able to access it through another bank then. So you are allowed to go to a different bank if your primary financial institution is not going to offer it. So that is an option as well.
And one of the things we've talked about is having a specific webinar on the HASCAP program. This has come up, so let us know if you're if that would be of interest.
Yes, yeah, we can bring in the folks that are running the program to potentially give us a bit of an overview if that's something that people are interested in, for sure.
And I can tell you in real-time feedback, we are hearing on the VR helpline that there is some confusion surrounding that, and even people's financial institutions are being super helpful. So I know there'll be some hunger for that assistance directly from BDC, because that's where we're directing them right now. Say, look, if you have questions, BDC is probably the people to call. So if we can get those who know on the webinar, I think that'd be very welcomed.
Yeah, well, one of the things that we've learned through this process that we know very well, but I think lots of people are getting a firsthand front row seat to this, is that these people, whether it's the banks or CRA or government itself, they're still working these things out in real time, which means that you're required to comply with things where governments don't always have the answers, or the banks don't always have the answer, and that's a very challenging part of what we're involved in right now. Okay, let's go to the next slide.
All right, so I think this one's for me. Did the government expand the RRF to match the CEBA expansion? And if you guys recall, we did announce, or we did share that government announced another $500 million to the regional development agencies, which we call the RDAs, to expand the RRF. So that is similar to the CEBA expansion. And although they haven't really been publicly announcing it, just thought you should know that some of them are actually providing this expansion. And so that's mainly Quebec, Southern Ontario, and the West Dev, which is BC area, the West. And so definitely something you should look into if you're interested in expanding your triple RF. Definitely contact your RDA that approved it. All right, next slide, please.
Okay, so I think we're getting to the end of the questions, and we're going to get to everyone to your questions, but we'll just cover a few of the rent subsidy questions. So is there an update on the OpCo HoldCo problem? Steve and a couple others were asking about this as well with CERS, and unfortunately there's no update other than that we have now raised it. We've raised it in a couple of letters, but we've also now raised it directly verbally with the finance minister's staff. So we continue to recommend a simpler approach to dealing with the non-arm's length revenue. But I am, I hate to be the bearer of bad news here, but I'm not, unlike Corinne's 50-50 optimism on the extension of the programs till the end of the year. This one, we're a little further behind. It was clear to us that there's kind of a lack of understanding even about what the issue is. So that's always very not that reassuring. And I think CRA's point of view on this is different from our point of view and your point of view on this. So it's a bit of a bigger hill to climb. What you can count on is that we'll keep trying, but I just want to be realistic with everyone that this doesn't seem to be a priority for government right now. Corinne, obviously, feel free to disagree with me if you do, but we do have a few additional details for you here if you are in this situation. There is an election you can make. But this is one that you'll want to check with your accountant on likely because it's your CERS and your CEWS revenue calculations have to be consistent. So your elections have to match up. And so you just want to be careful you don't do one thing for CERS that doesn't make sense for you when it comes to the wage subsidies. So also the other thing we're raising is that the HoldCo, even though there is this election that the HoldCo can make, if there was a mandated closure, you likely won't be eligible for the top-up subsidy. Again, speaking to your accountant is our best advice at this point. One of the other questions that came up, Stephanie asked this, that I didn't put on this slide, but is on a different issue related to CERS, which is the rent subsidy amount. The challenge being that you have to attest that you will pay your rent within 60 days, but if your CERS subsidy doesn't cover your complete rent, if you're getting like 60%, there may still be a gap, making it impossible for you to pay within 60 days. On that one, we are more optimistic. So when we raised that one verbally with the finance minister's staff, the heads seem to be nodding. So on that one, we are more optimistic, although of course the wheels of government change are always move slower than what we like, but that one we do have a little more optimism. Just to add a bit of color commentary there. Okay, let's go to the next slide. And I believe this is where we're getting into our questions. So I'll ask everybody to come back and join me by a video while I remind everyone of this important tip of keeping a journal and how helpful that can be, particularly around tax time and some of the things that you are, decisions that you're having to make, and keeping track of whether it's the S form or the non-S form, and how those little details, taking a few notes for yourself that you may forget to remember. And let's then now get straight to your questions. I think on the next slide, we've got our helpline number there. And as I said, for our Ontario members, actually, Reem, if you could just go a couple slides just so they can see what's in the appendix before we get to the more general questions. So just go one more slide in after the appendix. For our Ontario members, we do have the top helpline questions that we're getting there, the basics of the reopening plan, and then the next one has a few, if you go to the next slide, a few things on the support grant. So for Ontario members, you may want to do a deeper dive into our appendix slides there. Now we'll go back to the helpline and we'll hopefully answer some questions here that we're getting. So a couple of members commenting that they would like a HASCAB webinar, so thank you for that feedback. We will look at getting someone on for that. And I know, Corinne, that one of the things you're advocating for, and you mentioned it, but you may want to mention it again, is having some of that loan be forgivable. I've got a number of comments from members who are basically reminding us that if they're dependent on travel, that there's nothing for them, that they've been really hard hit, and this may be an avenue for some of those businesses that have really had very little in the way of assistance.
Yeah, for sure. I mean, the forgivable portions of CEBA loan, we're asking for that to be increased, as well as the amount of CEBA to increase, but also adding a forgivable portion to the HASCAP, or the Highly Affected Sector Credit Availability Program, which is really targeting the tourism sector and the hospitality sector and arts and recreation, which have been the hardest hit. So our advocacy on that front is pretty strong at the moment. As I mentioned, there is a budget coming, so we're really pounding the pavement these days to try to get our message across, and the importance of helping businesses who are accumulating just way too much debt throughout this entire period of COVID. In fact, we'll be coming out with a report in the next couple of weeks, I believe, that's going to really articulate the amount of debt a lot of small businesses have taken on, to really reinforce the message that government needs to look at ways to help businesses deal with that debt in order to help them get back on their feet more quickly. So the one way to do that is to increase the forgivable portion. And related to that, and I also got a question on this from one of the listeners as well, is the extending the deadline to pay back the CEBA loans. So right now you have to pay back the CEBA loan by the end of 2022 in order to get the forgivable portion. We are also pushing for and hearing from many that that's coming up quicker now than they thought. And so we have been actually pushing government to be more, potentially push that back. I mean, we are now in 2021, that's only now the end of next year. And I think when it was first conceived by government, then back in April, May of 2020, that seemed a long way off. Not knowing we'd still be in the situation almost a year later. And so we are going to be advocating for them to extend that as well. So those are things that are on our list of trying to help businesses deal with the debt that they're accumulating, which we know is going to become a bigger and bigger issue the longer this goes on.
Great. Thanks, Corinne. I've got another one, Rachel, that I'll put to you. Are we required to have a written lease to apply for the rent subsidy?
Yeah, this is a little frustrating, but yeah, you are required to have a written lease before October 27th, I believe.
And so we're advocating, it's another thing on our list, on our CERS list, that we put in our letter to the finance minister. So we've raised about, I think it's 14 different issues now on CERS. That's on the list because with CECRA, they had a better, with the previous rent program, there was a better process where if you could show regular payments and it looked like you were paying, that you would be eligible. But Jane, unfortunately, right now the answer is no.
Did you just say CECRA has a better process? I'm just kidding.
Maybe the one time I say that. But if there were a few things that CECRA was better than CERS, we do find ourselves saying that occasionally. Okay. Do you have any in your pile, Corinne, that you want to put to the group?
Yeah, there's a couple here. I was just writing one back, and we covered this a little bit, but Ava was asking, if you want the 10% temporary wage subsidy and have not taken either that or the CEWS but are eligible, can you complete the PD27 in order to receive it? And I believe, Rachel, you and Brendan did say that you can still apply for the 10% wage subsidy, but maybe you can just remind Ava a little bit of what goes into that application, what you need to do in order to access it.
Yeah, she would just need to file that PD27 if she wanted to take advantage of that, and keep in mind that it's for the periods that it was possible to apply for it. It's not like going forwards; it's based on those periods. That's when it would be received.
Right, and to remind her that it ended in June of last year, so it's only for those periods that from, I guess it was sort of early April to June, I think, right? Another question I'm having here on the wage subsidy side, which has to do with the T4s, and I think it was a good one that others may have too. So Dan was asking for the wage subsidy. We received funding for 3 months of 2020, but we kept our employees working in the entire time and paid them. We took advantage of cleaning around our shop property and shop fleet. Should I have included a breakdown per employee claimed on their T4?
So yeah, again, the idea is that if you're not using one of these payroll companies, third-party payroll companies to do your payroll taxes, that you would have to keep a breakdown of the amount of CEWS that you paid to them, so that you can include that in their T4 slip.
Great, thanks, Rachel. Any in your bailiwick, Rachel or Brendan, that you want to throw out there?
So I have one from Jim. Is there a timeline to apply for the CERS? I think the first period available is September 20th. I can answer this, but I don't know if you want to take it on, Laura, either? No.
Sorry, I was answering a question myself. Can you repeat it?
Yeah, is there a timeline? Is there a deadline essentially for the CERS applications? That's essentially what Jim is asking.
You're probably in a better position to answer the specific deadline question, Rachel.
Not a problem, not a problem. Yeah, so there's 180 days that you have to apply and or amend your application for the CERS. And this is pretty consistent for each of the periods. So 180 days after the last day of the period. Hopefully that helps.
Great. And Rachel, while we're on CERS, I don't know, put another one out there. And because we've had this actually question in British Columbia as well, but this is with respect to Ontario. Do you know if we apply for CERS, can we also apply for the Ontario property tax grants? So because CERS also includes that property tax. So Jim may be asking as a property owner on that one.
So this one's really interesting because it depends on the way that the Ontario property grant is received. So if you receive it as funding to you and you're using it right now to pay off that property tax, then you do have to reduce you do have to reduce the amount of CERS that you received. But there are occasions where the CRA has kind of said there's a possibility for double dipping depending on the way that the credit is provided, right? So again, it kind of depends on which program we're talking about. But I think that one in particular does reduce. I would probably just double check with our phone line so that we can get you a for sure answer.
Yeah, and also the applications usually have something that requires you to declare if this is one of those cases where I would say that journal is really important, like to say that I want to make sure I'm on the right side of this, but this is my understanding of the application and to apply for what you may be eligible for. Makes sense. Okay, any in your pile, Brendan, that you'd like to get to?
Couple of questions. One is I guess more of a comment than a question, but the Canada United PPE fund that was coming out of Ontario but was available to the entire country was pretty popular. So popular, in fact, that it sold out pretty quick. Is there a possibility for the government to put more money into this fund? And if so, is there a possible timeline or rumblings of when that might be? I'll pose that to the entire group.
That was the Canada United PPE fund?
That was, yeah.
Because Canada United, that wasn't through government. That was
through the Canadian Chamber of Commerce.
That's right.
Yeah, I think the Royal Bank was involved in that as well, and there was a group of people involved in that. And I was in touch with them very early on in their process, but I haven't had a recent update from them. So we can certainly take that feedback back to them.
I can maybe also add a little bit of color to that. From what I've heard, I haven't heard anything that they would be getting more funding, but again, we'll definitely touch base with our contacts there.
Yeah, and then some provinces as well have implemented their own PPE funding systems. So, it's hard to say, I suppose, but yeah, perfect. So there's the answer for you, Christine.
Well, one other quick thing is that in the appendix to this deck, There is a list of provincial programs because, Brendan, as you quite rightly flagged, there are some provincial programs that cover some of the PPE needs. But the Canada United funding was not government. I don't know that there was a government contribution to that. That was private. That was private sector. That was grants from a group of companies. So and I don't know. I don't think they have plans to do more yet, but we can look in on that.
Hmm.
Anything else, Brendan, on your list? I know our runway's getting short, and we usually we usually skate a few minutes over just to get a few more questions in, but we'll start wrapping up soon. So I'll ask each of you if you have some additional questions or comments you want to put in.
Just one I'll touch on real briefly because I've had 3 questions from Christine, John, and Matthew on this one. They're asking about the potential to require your employees to be vaccinated once the COVID vaccine is available in their community. I'm going to give the unpopular answer right now first and then add a little bit of value to that. So the unpopular answer, of course, is we don't know yet. The WCB boards are mulling this over currently as we speak in each province. There are human rights implications surrounding that. So yeah, we put a question mark right now. But from what we look at from the human resources perspective is we look at other requirements. So for instance, when you're hiring an employee who's exposed to vulnerable populations, so the elderly, children, or people who are otherwise infirmed, you can require things like a background check. Or for instance, when a nurse is hired, they are hired under the premise that each year they will get vaccinated against that flu for the year. So if we look at that as any kind of indicator, what we believe may be the case, and this is not gospel by any means, so don't go taking this back to the judge, is that if you are in an industry where your employees are exposed to vulnerable populations, you may be able to require vaccination and proof of vaccination from them when hiring a new employee or managing your current employees. But likely for those who are not directly exposed to vulnerable populations, you won't be able to require this of your employees. Like I said, though, stay tuned. That is an inference that we've made thus far, but that's certainly not gospel, and there's nothing in law or regulation that states that that's going to be the case. So stay tuned. Once we know, you'll know.
Yeah, it's the cutting edge of public policy, where public policy isn't going to have to be made.
Brave new world.
Brave new world. Rachel, any additional questions you want to end with?
I'm seeing a lot of HASCAP questions, but I think we'll just have to have some sort of webinar on this based on what I'm seeing to address some of it. And also I'm seeing a lot of Ontario provincial grant questions. So I do think you guys should definitely look at the slides in the appendix. It has a lot of really good information. 2 hints or 2 pieces of advice that I would probably mention from those slides that I think kind of applies to everybody is to, as things are reopening, double check with your municipal governments to see what those rules look like, because they might actually be more restricting than your provincial rules, depending on where you are. And yeah, getting a health and safety plan, you should have that by now.
I think the other important tip from that slide is to some of the people who are having trouble with the website for the grants, that to try it at an odd hour, an odd time of day, that they're having a lot of problems with their volume, Rachel, from what we understand, and that's a good tip for Ontario members. The other thing I wanted to say is that I know there's a requirement for retail to have their max capacity sign, and we're looking at getting some. I know you can use a black tip pen and do that, but we're looking at just getting something really quick for people that looks professional template. I was talking to our Ontario folks today about that, getting something fast out to you. So a couple more tips for our Ontario members, who we just feel for you guys in Ontario. I mean, it's been terrible across Canada, but Ontario in particular, the lockdowns have been, Quebec too, but Ontario, I mean, some of you still aren't out of it, and that's been very different from some other parts of the country. Okay, Rachel, anything else before I turn it over to Corinne for her last questions?
Probably some feel-good comments, just to remember to share the love with businesses this weekend, whether it's just supporting them by doing a good 5-star rating or a small buy or just avoiding Amazon, then yeah, hopefully we can just share the love on the weekend.
Well, I might use that as an opportunity to sneak in Vanessa's comment, which is that Amazon isn't bad for everyone. And Vanessa, you're quite right. There are some small businesses who are on Amazon, very small numbers according to our surveys who are on, but we should be a little more careful on our language. That what we're really saying is choose your small businesses, choose local right now, because big box stores and bigger retailers are doing really well, whereas small businesses aren't. So, but thank you for the reminder, Vanessa, that some businesses have actually benefited from being able to be on that platform. Corinne, what's in your pile that you might want to get to?
Well, a number of questions on some of the PD27 and tax forms. I know that they are somewhat confusing, so definitely give us a call at the helpline or talk to your accountant if you can to make sure you're doing them correctly. There's also a number of folks who said that HASCAP loans are still not available at their banks, so thank you for that feedback. It seems particularly TD Canada Trust, but BMO came up as well, and CIBC as recently as this week apparently someone tried and they didn't know anything about it. So that's great information for us, so I appreciate you sharing that with us. We will certainly follow up with BDC and the banks to find out what is going on. That certainly should be available by now, as we've been told repeatedly it is. So I just wanted to sort of make sure I covered off those things as well. And so I'll use the opportunity now to also potentially say a few words and thank everybody again for joining us. I hope this was useful. I realized maybe we had maybe a little too many questions in the mix, but hopefully that most of you were able to still get some answers out of this. And again, please give us feedback on how we might want to improve these webinars and make them more useful for you. We will certainly still be bringing in guests going forward and obviously focusing on whatever is new, but we know we can do more to help you on the day-to-day. And finally, as everyone else says, please shop local and remember the small businesses, as Laura and Rachel both said, as you go out and celebrate your loved ones. So, and please take care of yourselves.
Thanks, Corinne. Brendan, last words from you before I wrap us up?
Yeah, a few last words, absolutely. So we've noticed a little more frustration on the helpline the last few weeks, and it's completely understandable. Q5 is not treating people very well right now, especially in the eastern side of the country. And you know what, that's okay. If you call us frustrated, that's okay. We are here to listen. We're here to help you. So just know that, you know, our goal on the helpline is not only to answer any questions you might have, but also to kind of take some of that frustration. So, you know, call in and know that we're on your side, and we want to do whatever we can to help you out. And sometimes the answer is I don't know, or often these days the answer is no. But just know that we've got your back, and we'll do whatever we can to help you, so that when you're calling in, you're calling a friend, and that yeah, we're on your team. Basically, that's the best way I can put it.
Thanks, Brendan. And I think you're quite right in saying I don't think February is anyone's favorite month particularly not in Canada. And it's very challenging. We know from a small business perspective, often, particularly if you're in the retail sector or restaurant sector, February can be very challenging. So I'll just wrap us up with a few final comments. Hang in there. There is light at the end of the tunnel. We're also, just to say that, lots of feedback on the HASCAP stuff. So I think we will look at having a guest on that to come in behind Corinne to let you know that if you have some recommendations for these webinars. We are struggling a little bit with some weeks. There's just not a lot of big announcements, so we're trying to figure out, but we know there's still a demand for having some information. So we'll try to be really clear in the emails what the webinars are going to cover, and whether there's whether it's new stuff or whether it's just frequently asked questions. But please feel free to give us any other feedback on that. Look after yourselves. I know everyone's feeling a little grumpy right now, and for good reason, as Brendan said, but hang in there, and we're going to hang in there with you, and we'll be back. We'll be back, and we'll be here as long as you need us on these webinars. But also, of course, our helplines are always there for you, as Brendan said. And with that, we'll end this week's webinar, and we'll hope to see many of you back next week for week number 42 of our series. Thanks, everyone.